All right, what's up, Tycoon? Super excited for today's video. We're going to go ahead and give an update on the VIX, okay? The volatility index, the fear index, whatever you guys want to call it. This is the thing that you need to pay attention to, and this is going to tell the story of the stock market, okay? Once you truly master the VIX and really try to, understand why it moves and what's making it move, you're going to do a lot better and really trying to understand the overall market sentiment and why certain things are moving and why certain things are not, right? And why they move on certain days and why they don't move on certain days. Okay. The thing that I want to point out, all right, and I've pointed out in my previous videos, is that these are our Fed meeting and rate hike prices on the VIX. Okay. VIX is going to come up and it's going to hit this 31.11 level. It's going to come up to 34.55. All right. And it's done that every single time. Okay. We can look, see the Fed meeting and rate hikes here. Why is this not working? Here we go. Here we go. Here we go. And here we go. Okay. Now, the reason I have peak fear up here, okay, is because this was our high and we have our Fibonacci's from the swing high to the swing low here. These are all of the price levels, important price levels, main price levels that I'm watching on the fibs. And, these are all calculated by a math equation, right? So it's not me drawing these up. The system is going to draw them up for me. All right. So keeping in mind that these are the levels, what happens is when the volatility index, the SPY goes, when the VIX goes up, the SPY goes down, which is the S&P 500. Okay. So these are when you're seeing all of the bloodbaths in the market. Okay. Huge bloodbaths in the market every time around these areas. All right. We have CPI data coming out tomorrow. We have PPI data coming out the next day, right? And then in a couple weeks, we're going to have our next Fed meeting and rate hike. Okay. So what's happened? And I'll go ahead and break down the price action a little bit sooner, in the video. But what's happening is, and the main thing I want you all to notice is that after, this fear is over from the Fed meeting and the rate hikes, and they hear, okay, hey, well, we've been fearful that they're going to, hike the rates up this much, right? So they do what's called pricing in, okay? And they're pricing in this 75 basis point rate hike, this 100 basis point rate hike, right? And they're pricing all of that in. And once the Fed actually does what we want them to do, or what the market thinks that it's they're going to do, you see a dramatic drop. Okay, we go from 38.94 all the way down to 19 on the VIX, 50% drop. Okay, again, we come up here 37.52. We come all the way down to 18. We come up here, hit 36. We drop back down all the way to 23. Here we hit 35. We drop all the way down to 25. Okay, 24.49. So there's a pattern that I want you guys to realize and pay attention to, right? So you don't want to be buying in when the VIX is super low and we're rallying off of the basically the good news, not even good news, but the expected news of what the Fed did, right? Because every time that happens, again, we have a sharp drop in the volatility index until something new comes up, and inflation again, or rate hikes again, or supply chain issues again, Russia, Ukraine, whatever. All right. So that's the main thing. That's how you want to trade the Feds. All right. We're going to go down to the 1 hour chart. And this is where I really break it down every single day. And, in the Options Trading Tycoons Discord, right? I'm looking at VIX every day, posting what I see intraday. All right. And I've marked it up here so that you guys can see and understand what is really going on. Okay. We'll look at the most recent price action that we had from my last video. I showed you guys, and these arrows just signify, right? I said, hey, we are technically in that zone where VIX is going to continue dropping until we get closer to the next Fed hike, right? And so if you're looking to enter bullish positions, what you want to do is you want to wait for a rejection on the VIX, and you keep seeing rejections on our Fibonacci levels, then and we keep getting rejected there and heading lower, that's bullish for the market, and you can stay in bullish plays, right? Then we have the nice flag right here. Here's our flagpole. Here's the little flag right here. And again, it's painting the picture for us. All right. We can look here on the 1 hour chart. Look at these wicks. Look at these 3 wicks. Price action is coming up quickly getting rejected. It doesn't even get to stay up there or close, right? It's coming up, quickly gets rejected, comes up, quickly gets rejected, comes up, quickly gets rejected again until we open and close below the bear flag, right? Which that's your first confirmation of the bear flag is once you open and close below it. All right, we did that. We found support at our 27.43 level. Okay. And then again, we flipped that level to resistance. Okay. So just painting a nice picture for us. Okay. Hey, I can stay in my bullish positions. VIX is continuing to drop. The market as a whole should be, performing well. Right. And then look, we see here the next day. All right. We flip this line from support to resistance. We come over again. We try to, open above it. But again, it's a valid resistance level. We close below it. And we break this level, close below it. And we break this level, close below it. So, those are all the signs, right, that of bullishness. All right. We're seeing nice rallies. We're seeing certain things perform well. And then boom, VIX just skyrocketed up. Right. Well, I warned a lot of people on Friday of it. Right. I said, hey, there's bullish divergence on the VIX. Okay. Now, bullish divergence is going to be these two ovals. Okay. So if we have here a low, we have a much lower low right here. Okay. So, we got a low of about 25. And then down here, we got a low of 24.43 on our RSI. Okay. And I was also watching this level because this is a key level that we bounce on the VIX. Okay. If we look in the past, all right, we came down and VIX is super oversold. We found support around 20.22. Again, we found support right here around 20.22. We created that bullish divergence by making a lower low, but the relative strength has been increasing. Okay. The RSI kept increasing. So as VIX went lower, the strength of the VIX actually increased. And that's when we see the bullishness. Okay. We see this huge gap up. And if you watch my videos, you know that I talk about gaps a lot and how they fill 90 to 95% in the market, right? This gap down may not fill until the next Fed meeting is over, right? Until we get that spike in VIX all the way up to our previous levels at 31, 33, and 34, 40, 45. Okay, those areas. Again, today we gapped up again, but we were able to fill that gap. A lot of stocks this morning popped really hard, and there was a very, very nice pop in the market, but we see that it did not last. Okay, so we come down, we filled this gap, so we can get rid of this gap now. It's no longer relevant, right? And we see that we're still coming down and trying to fill this gap. So we're going to go and activate our drawing. We're going to adjust it now to the parts that it hasn't filled, okay? Because that's what's relevant to us. All right, we've already filled, these lower areas or these higher areas of the gap, but this is still present. All right, so we're going to go and put this out to 2023, just so we got plenty of time to know until the gap fills and we don't lose it on our chart. All right. But if VIX pulls back, okay, we got 26.68 as support, 26.27 as support. All right. If we want to paint the picture of bullishness in the market, we need to do what we've been doing previously and flipping those support levels to resistance. Okay. But that doesn't always happen. Sometimes it does flip to support and we shoot up. All right. Again, here's another example of a gap down filling. Okay. We have a nice gap down fill right there. And, that was a very bullish day in the market. So, I am still slightly bullish, believe it or not, because we haven't really got above this 27 level here and started to close above it. But I'm very cautious, okay, because I know the market context. I know we have CPI, I know we have PPI. That's what's causing volatility to increase in the market. All right. And if the VIX goes up, the SPY and generally stocks will go down. Okay. So, we have bullish divergence on the VIX. There's a very strong possibility that VIX may pull back, find support at the 50% retracement level right here, or maybe even at 26, 27. And, if it does, it also might bounce off of this bullish divergence trend line. Okay. You can see we have the 1, 2, the initial higher high on the or higher low on the RSI. We came over. All right. And when VIX started to fill that gap down here, all right, it found support on this bullish divergence. Okay, so VIX is going to remain bullish until we break this bullish divergence. And once we break that bullish divergence, then we're going to have a chance of filling the gap down. Okay, so if you're looking to enter any new positions, right, bullish positions, that is, you're going to want to see VIX paint the picture for you. You're going to want to see it get rejected, okay, and start to flip its support to resistance as it's done in the past. Okay, so you're going to want to look for all of the signs, like these, where it turns it into resistance, turns it into resistance, turns it into resistance, right? If it's doing the opposite and turning it to support, okay, you can expect the market to keep falling. Now, do I think VIX is going to skyrocket up to 35 to, those Fed meeting price levels just off CPI and PPI? No. But, you can most definitely expect a sharp spike in VIX before CPI data comes out. And, that's what we're seeing, a little bit more closer to the end of the day, right? We opened up very bullish, and bullish because the VIX is going down, and then look at VIX, it skyrocketed up. Okay, let's see what kind of, you want to talk about the volatility index. Look at that. Let's look at this rally right here, up 7% in 2 hours. Okay, so it dropped hard and then went up 7% in 2 hours. That's what's going to happen with the VIX. Okay, but you need to pay attention to this gap. You need to be ready for this gap to fill, because you don't want to miss out on those gains in the market. But you need to be cautious, and you need to wait for VIX to paint the picture for you. You need to wait for it to, get rejected and show that it's flipping support from support to resistance, that it's going to break this bullish divergence trend line. And once it does that, then you have a green light and you have confirmation to get into a bullish position on the SPY or something else with a nice setup. Okay. None of this is financial advice, but I'm really trying to help you guys understand market context. And, the VIX, the volatility index, is really going to help you out with that the most. Okay. So thanks again for watching. Don't forget to like, comment, subscribe, and yeah, I'm out.